Hi, I am Narain Dawali with my student ID KEF2055. This is the group presentation and we are here for the presentation on the topic accounting for business decisions. I am going to start with the executive summary. This report summarized financial information which is generated by analyzing, evaluating and interpreting the financial data to make decisions to financial expertise of business relating. The report helps to organize various issues such as adopting different forms in organization, investment, decision making, and determining entity worth. Now, let us begin with answering various questions. I'm going to start with question A. Various forms of organization can be adopted by George, where the options can be partnership business, LLP structure that suits his business best. Let me explain about the partnership forms of business that can be applied. It is the structure where two or more parties are involved through mutual interest, agreement, and mutual understanding. It has various pros and cons that the risks will be divided into partners. The business structure will have unlimited liability. It generates idea amongst the partners and transparency are some of its advantages. Likewise, the business will have unlimited liability, sharing of profit, loss of autonomy, and self-employment taxes are its disadvantages.
Hi, hello everyone. My name is Yin Chen Won and my student number is AES 8001. I'm in the group 1 of Accounting for Business. Today I'm going to talk about two topics according to my part of assignment. In the first topic, I'm going to explain how goodwill can be listed as assets and how it can be affected by past investing decision. And the second topic is accuracy of the financial report. What should we consider when assess the business value based on the balance sheet? Okay, let's start the first topic. Goodwill is an intangible asset in the business. It can only be recognized if it is acquired. When a company has paid more than the fair value of the identifiable net assets to purchase another company, so we can say that premium payment is goodwill and we will list on the balance sheet as an asset. The value of goodwill can establish by customer positive experience, and also it can improve by investments. For example, a positive reputation with high quality products can build up the value, and the highly brand awareness by advertising can improve the value of goodwill as well. Goodwill is something you need to build up by time and effort, so that every single decision of investment in the past will impact the value directly. So now we are moving on to the second topic, which is accuracy of financial report. As a buyer who must consider the accuracy and the reliability of financial report, we can't fully rely on financial statements to assess the company's worth. Sometimes unclear or untruthful information which can make the business looks more valuable than it is. Also, the report will never show you the dark side of business as well. Investigating the financial data can help to analyze and ensure the accuracies of the statement. For example, we can do like inspection of inventory, double check the bad debt, check the detail or information is that matched to the other reports. Thinking about what kind of model or what kind of model do they use on the report. This action can help us to understand more about the financial situation and the accuracy of the report. All right, that's the end of my presentation. Thank you.
Hi, my name is Hira Mahato and my student ID is NAF 2021. I'm answering question D and E from Group 1. Looking at question D, the account receivable and inventories are classified as current asset because both are cash convertible and are expected to be realized or settled within the current operating cycle of the business, which is normally 12 months of period. Now talking about the correct measurement, a fair value measurement is a market value or the actual selling value of asset that is agreed between buyer and seller. Now applying the given current information, the inventory is reduced by 10% because 10% of total inventory is obsolete. The current market value of the building is 800,000, which have increased from 500,000. An account receivable I have left as it is because it might get settled within the business cycle. So that brings total asset of $1,275,000 and total liabilities $600,000. Here, the total asset is still higher than total liabilities. That means the company is profitable and it's in good shape. Now moving on to question D. If George decides to buy the business, explain him the impact of business financing decision. So using the fair value measurement with current information to measure the company's ability to repay both short and long-term obligations, the current ratio, current assets are divided by current liabilities. Here, assuming the bank loan as non-current liabilities, the current ratio is 5.933. That means it can easily settle each dollar on loan or account payable is 5 times. So the company is financially well-being. Again, assuming the bank loan is current liability, the current ratio will be 0.74, which is still all right because it can pay. The business has 0.74 assets for every dollar of liability. Now, looking on debt ratio, which calculates the leverage ratio, which calculates the amount of capital come from debt to valued company's debt level. So debt ratio is total liabilities by total assets, and it's 0.47, means the business has $0.47 in debt for every dollar of asset and is in good financial health. Thank you.
Finally, after evaluating various issues we came to the conclusion that accounting is an important expertise of business in decision making, as it helps in effective management of different business activities. So we can say that those will benefit from partnership business. Furthermore, those can enhance the level of recognition of business through understanding goodwill. Hence, business accounting helps in decision making of financial expertise, as it helps to understand the capability and value of asset. Thank you.